What is going on, Hot Take Nation? It is DRW here for another episode of the Hot Take of the Day podcast. And this week, I am very fortunate to be joined by Paul Sankey of Sankey Research. We're going to cover, there we go, a little hand wave. We're going to cover all things oil, gas, equities, analysis. And Paul has been, when did you start? Was WoodMac your first job, by the way?
No, I was very fortunate. I came out of Manchester University, which was a great city to study economic history because it is a whole story about economics. Manchester only exists because of the Industrial Revolution. It's actually built in the rain shadow of the Pennines so that they could run the water mills, which is why it always rains in Manchester. So I came out of Manchester University. I really didn't know what to do, and I was fortunate to get a job at the International Energy Agency, and I was doubly fortunate because with my boss Kieran O'Sullivan, we did the first book of non-OECD statistics. So a lot of the numbers I made up back then, my joke is that we were concentrating when we did Albania, but by the time we got to Zimbabwe, Zaire, and Zambia, anything went. But the serious point is we really had no idea, and we still don't really know a lot about where all the oil goes. The big commercial trading houses don't want you to know. But what would happen, and that was in the year 1990, is obviously that non-OECD would be the driver of the global oil market from the most important aspect, which is demand. And then in 95, 96, I left the IEA after 4 or 5 great years in Paris and went to Edinburgh to WoodMac. WoodMac was originally actually a stockbroker, and they had an equity research arm that got, in the big bang of UK liberalization of the banking sector, the WoodMac oil equity sell side, which was top class, looking at the North Sea particularly. They did such good equity research work that they became effectively a standalone consultancy under the brand name WoodMac, and the oil analysts we're in the same building, the equity analysts, and they became branded as, when I joined NatWest Markets, it eventually became Deutsche Bank by around 2000, and I joined that sell side team from WoodMac, so I flipped to being a sell side analyst, and then in 2004 I came to Wall Street with Deutsche, and I'm just going to try and turn off this blinking, sorry, and since 2004, I've been here in New York, essentially covering the oils from a sell-side perspective. In 2013, I saw the writing on the wall for Deutsche Bank, God bless them, and went to Wolf Research. We had good 4 years at Wolf. Then I went to Mizuho for 2, and then after 2, I started Sankey Research, which is, an interesting experience and a standalone experience. So there it is, David. I hope that's not too much information.
No, it's great because I actually wanted to start at the IEA. And, they obviously publish a lot of papers. And when I was allowed to be on LinkedIn, my ban continues. The IEA, it seemed like they were cheerleaders against fossil fuel, at least now, the current incarnation. It feels less like an energy transparency and information group, and it feels more like a cheerleading section for wind and solar. I'm curious, is that a fair assessment, and have they evolved in their mandate, and what is their funding source, and your experience with the IEA, and when you interplay that with all of the world's needs for energy? How do you balance which information is good, which information is bad? BP comes out with a report that says peak oil's here, and miraculously, they're not going to drill for oil anymore. So how do you nuance through that as an analyst between people's personal agendas and funding and etc.?
I think you're a bit harsh on them. I mean, I think what Americans don't realize is the extent to which existential concern about the environment is out there in Europe. There's a real belief in Europe that we have a major problem on our hands and we've got to do something about it. The IEA is kind of part of the OECD, so it's funded by its member states, and so it is politicized to an extent, and they will have arguments about what they're going to forecast and what they're going to say because of the political agenda. Particularly, you'll notice they don't forecast OPEC production, which is kind of the most important thing, right, after demand. But they won't forecast that because it's perceived. And originally, France was not a member of the IEA actually because it was perceived to be an anti-OPEC body. I think that the quality of the people, the quality of research, the oil market report, for example, I think is excellent. It's easy for us because it tends to be a trailing indicator. So for aggressive analysts, we can once the IEA starts saying it, you better move on to the next thing, kind of thing. But I think the political aspect of what they do does somewhat affect the way they look at the world, and it's driven by the European agenda, which very obviously is mitigation of global warming and the importance of doing that. But generally speaking, it's like the DOE over here. It's a very helpful body for all of us, right? Because
Right, very
essentially
helpful.
the IEA charges, which I'm not sure, I pay my taxes. I mean, what I love about the DOE is that they just make all that stuff available, and that's tremendous. And the beauty of working on the US oil markets is that the information is so good. So, in China, we don't have a clue. In the Middle East, it's extremely uncertain. India's okay. Europe's quite okay. Japan's quite okay. But you have this excellent information in the US about what's happening weekly, and for good analysts, it's very exciting because we can actually look at the market. But yeah, no, the IEA is a good experience. It's a bureaucracy though, and you have to see it in those terms. For example, in 1990s when we were forecasting, the other thing I should say, and this is the problem for BP and Exxon, is they don't forecast a price, which is like, how are you going to seriously do an energy balance for the next 30 years without trying to understand where the oil price is going to go? Is it going to be 20? Is it going to be 60? Is it going to
And
be...
why don't they do that, in your opinion, or have they published that? I was not aware they didn't publish a price.
Well, you won't. I mean, look at BP. The one price that BP put was $250 a ton of carbon in one of their scenarios. And you're like, dude, there is no chance that happens. That would be $3 plus per gallon on a US gallon of gasoline. That carbon price is the equivalent. It's over $10 per MCF of gas carbon price.
Right.
It's like that's just not going to happen.
Right.
We did it with China back in the 90s, where they said use, I think it was $20 or $25 flat oil price until 2015, which funnily enough was the outlook period. And we came back with China using 70 million barrels a day of oil at a time when the whole oil market was 60. And they were like, well, you've got to increase China's energy efficiency. And you're like, do you think we didn't think of that?
Right.
The obvious implication was the oil price would be a whole lot higher if China was going to do what it did. And of course, that's exactly what happened. It was really China that drove the oil price to $150 a barrel in 2008.
So let's go back to a topic. I mean, you talked there without talking oil price per se. Let's talk about the hot topic right now. The European political agenda is wean off fossil fuels. Carbon prices, as you just said, if people actually were to think about 250 a ton is $3 a gallon for gasoline, which means gasoline prices effectively double in this country, and 10 an MCF. I mean, I don't even know what that does for heating costs. Presumably, it would go 4 to 5 times, and it would make it very, very unaffordable to live in Minnesota. But if we break down just peak oil demand globally, do you believe that post-COVID we have hit peak oil demand globally?
Well, the good news is good news depending on how you see the world, but from the point of view of an oil producer, we got to 100 million barrels a day of oil demand, right? So we never thought we would get that big. In fact, the late, great Christophe de Margerie, the CEO of Total, who tragically died in a plane crash at Moscow airport, that was one of his big themes, is that you simply can't supply this much oil. But of course, over the past 10 years, the US revolution more than supplied enough oil. In fact, the US revolution in supply exceeded global demand growth in its entirety. So all of global demand was more than met just by US supply growth. From here, as I mentioned, the long-term forecasting miss a couple of things that are important, I think, and there's numerous. One is just the political agenda in any given country. So a lot of these forecasts depend on Africa and the strength of population growth in Africa, which is very strong, assuming that Africans then, essentially move towards a middle class. But these forecasters won't say, by the way, the political capital in Africa is an absolute disaster, and maintaining any kind of sensible economic growth could be a real problem for these countries. And by the way, it's kind of the British fault, right? It's colonial fault that somewhere like Nigeria is so structurally broken, because the colonials came in with no view of the real people living in those countries and drew borders that mix, like in Nigeria, Muslims in the south, Muslims in the north, and Christians in the south, who are totally different peoples essentially, but they all try and live in Nigeria. And another great example, obviously, is Iraq. You have a disastrous border in Iraq. It doesn't make any sense in terms of the ethnic makeup of the country. So there's that political issue as to whether or not we can actually grow the world economy, because essentially all oil demand forecasts, all energy demand forecasts rely on first demography, population growth, obviously, and then per capita GDP. It's as simple as that. It's like, how much richer are we going to get, and how much more energy will we use as part of that? And just last week, I published something called "You Sure About That?" EU Sure About That, saying, look at the demography of Europe. Look at the fiscal balances deteriorating. Particularly the demography is a disaster. They're not having enough babies, frankly, and they don't really want migration. So you're going to put an enormous cost on people for energy at a time when the economies are really struggling with all the entitlements and benefits that the governments are due to pay out. So my point was, I have no confidence in a post-2030 view of the European economy. I mean, I think it's kind of like, it could be a real, I've said it's better probably to forecast the breakup of the EU. But it becomes very depressing, because at that point you can also say, well, maybe global population is going to fall, which obviously is what happened kind of with COVID, although, as you know, it's been pretty marginal. It still tells you there's a risk that population doesn't show up. And if you look, by the way, at demography in China, the demographic balance is also a disaster. The strongest demography is in Africa and the Middle East, and they will drive demand, I believe. The single biggest question, probably immediately, which we've been talking a lot about, is airline jet fuel consumption. And do we ever go back to the level of intensity? The Boeing CEO had a line that every year up to 2019, 100 million people a year were flying for the first time. And, so the growth there, which was the single biggest growth element of the global oil market, was jet fuel, and is the least substitutable in terms of oil. That will be an absolute key. We wrote also last week about propane. On the energy ladder, you basically use dung, wood, and then propane. And so propane is the first fuel, commercial fuel, that billions of people are going to start using. And again, I wrote last week about propane, about the Indian demand story, where they have a program there to give away tens of millions of free LPG canisters, because people are literally dying from using firewood and dung in their houses to cook.
It's like 600,000 people around the world die, and it might actually even be higher, die from indoor pollution from cooking their food. And the number is just so incredibly large relative to so many other causes of death. So interesting point on the propane. I hadn't realized that it was the next step up, but it obviously makes sense. When you go camping, you bring propane. Your first, your outdoor heater is propane if you're not connected to a grid.
Yeah, I mean, another line is that the scooter does, a gasoline scooter does 220 miles to the gallon. And I used to live in Africa, and you do see a lot of people walking. And it's not funny, basically, but they're walking for days, and if they would only get a scooter, it would change their life. The problem for us in Africa, and this is a long time ago, this is in the 80s, wasn't the price of gasoline. It was, there was no gasoline. There was just literally none available. So the potential there is definitely high if you believe that Africa can have a better next 50 years than it did past 50 years in terms of political stability. The problem with that is that if you look back to Argentina in 1910, the country was, I think, fifth richest in the world, right? And it's just been an absolute debacle, frankly. God bless Argentina, but politically a debacle for 100 years, and has never delivered its economic potential, which is enormous. And so the question is, and I've asked people this question, have we ever seen a failed state actually recover and become politically stable and deliver? And people would say, yeah, Japan post-war, Germany post-war, places with very strong culture essentially have that potential. But I think that, it's very difficult to reimpose the working system on, for example, as I said, these countries with very bad borders, because they're just kind of structurally broken. So it's a long way of saying I'm not sure about the global oil market going forward. I think that we will recover jet fuel demand. I do think we'll lose a bit of high-end business travel, just because we can Zoom, and Zoom works so well. The game changer, as I said to you on Friday with Zoom, is that the conversation is natural, and you can interrupt me and it works. And that was never really the way the system worked with previous video conferencing. But Now that it works so much better and we're testing it so hard, you've got to assume that it's changed behavior. On the other side, as you know, everyone's going back to the suburbs and an extraordinary level of people moving out of cities, which of course reduces mass transit and increases gasoline demand in a big way. Another side of the propane story is that more people are living in the country will use more propane in the US. So the current shift in behavior, notwithstanding jet fuel, is actually very strong for oil. And a smart hedge fund manager told me that at the bottom, if you think about it with COVID, what we proved is how dependent the world is on oil, not how much we're transferring away from oil. And you then get into, things like hydrogen, and only a cursory glance at it will tell you that it's about, around where Nikola is right now in terms of actually delivering a product, which is,
You drag it up to the top of a hill and let it roll and tell people your car
I mean,
works.
that's another good example, David, and there's hundreds, is that these a wind turbine basically produces a barrel a day of oil. You know, it's just not enough energy density for what people are using. So there's a huge amount of aspiration here, which I think is correct. I was just thinking about how the market with Bezos and Musk is essentially financing Mars exploration. But what's the expected return on Mars exploration? The answer is it's almost an altruistic effort to improve the future of humanity, and that will be financed. And so it becomes very difficult from a valuation point of view if people are just going to throw money at hydrogen because it is a better future and it is the only solution ultimately for heavy trucks, for steel. It's the only low carbon solution. It's a very interesting valuation conundrum, which is that the market wants to buy this stuff regardless of valuation, at which point you have a greater fool valuation, which is that more and more money goes into it, regardless of the fact it will never make any good returns. How do you manage that? Very difficult to know. My big argument is that essentially, when we eventually tighten the oil market, we'll get inflation. And when we get inflation, all these crazy multiples on 2030 type sales will be a problem, because obviously if you have inflation, the multiple effectively might be double what you think it is if the dollar is going to be a lot weaker, and if there's going to be could be hyperinflation in theory, right?
So I love all of that because there's so many places to go.
Yeah.
But where I want to go with that, and I think for listeners, I think it's important, and it ties to the theme of COVID, it ties to the theme of the world. But you are an analyst who is looking at oil as an example, and you can't just look at oil, because if you don't look at politics and the way borders are drawn in countries and political stability and education rates in those countries relative to birth rates and immigration and emigration and overarching policy and financial stimulus and the political environment, if you don't look at all of those factors and then integrate them into some analysis, the analysis is bollocks. And so, to use COVID as an example, is we listen to a doctor who says, well, it's very infectious, we have to save every life, so we should shut down the economy. And I think what people have now maybe seen over the last 6 or 7 months is, yeah, but when you shut down the economy, then lives are lost, but then there's suicides, but then there's job loss, then there's economy loss, then there's political instability, then there's changes in birth rate, then there's changes in migration patterns, and there's all this thing. So how do you, as an analyst, from a macro standpoint, sit back and look at all the things that could be and pick the ones that matter and the ones that don't matter to come up with a cohesive thought process? Because it seems like, quite frankly, daunting.
Well, yeah, I mean, sure, the subject is too big. But we sort of know the parameters. I think one of the interesting things about COVID is that we haven't had a pandemic for 100 years. So we were totally unprepared in Europe and the US. And by extension, we're not going to be unprepared next time if we do get another pandemic. So, you saw the Asian countries' reaction, having had SARS, having had camel flu, MERS. They were just much more organized about what to do about this thing. And there's always a question of what really truly happened in China. But ultimately, many of these countries have, managed based on the fact that they've seen something like this before. Whereas, New York's hasn't been hit by a pandemic since whatever it was, 1918. So I just don't think that it'll be as bad again. That's the first good news. The biggest and most difficult thing is this government printing money, man. I think none of us really know where this is going, because, last week was the 12th anniversary of the all-time fall in the Dow, which would have been September 29th, 08. if you recall, the market fell so much that day because the TARP wasn't passed. There was tremendous controversy about printing that many
And it was
dollars.
800 billion, if I remember the TARP number correctly.
Yeah, I had 2 trillion in my head, and then I looked it up, and it says finally it was 450 billion, of which like 460 was repaid. So I don't even know what the final number is, quite frankly. But if
But
you
it
remember,
wasn't the numbers we're talking about now,
it
and
was,
it
you know,
certainly was
it was
controversy.
exactly, it was a quarter or whatever of what it is today. And at the time, as you know, the Tea Party formed. You know, there were people crazy about this thing, and ultimately the Senate voted it down, and the market collapsed because it was like, you can't do this. And then we did it, and 12 years passed. This year they threw out 2 trillion without anyone blinking, right? I mean, it was just like, here's 2 trillion. You hear the comments of the Fed, and it's like, well, we're just going to basically try and get inflation. And you're like, well, you know, it's kind of a Pandora's box, guys. I mean, you know, you're smarter than I am, but I don't know. And all of that could be very bullish for oil. But I think that's the biggest imponderable as to whether we go to a Japanese style model, because Japan has showed that you can just keep printing yen for tens and twenties of years. You never really get any good economic growth, but somehow we keep financing it. China is interesting with the amount of debt, US debt they hold, as to whether or not they change track on that. And you know, in that context, the economy could be strong because we printed so many dollars, or we could get hyperinflation and have a total disaster on our hands. So ultimately, the whole question of oil demand that you've gone to is, where's the economy going to go from here if we're just trying to print government money? By the same token, you know, anything that's subsidized is unsustainable over the long term in theory. And so if you're printing dollars, such as the Biden administration may, if they win, in order to get into renewable energy, it's not really a sustainable solution. And I just find it very interesting that with a purely market-based approach, by accident over the past 10 years, we reduced US CO2 emissions by the penetration of natural gas and the removal of coal. And there's still a ton of coal to be taken out of the world. I mean, the world economy is basically 30% running on coal. So the idea of fiddling around with hydrogen is a bit absurd in that context, and it'll really boil down to what China does and how sustainable China is. There's really, you know, a third of all oil is used in the Americas, a third is used in Europe and Africa and the Middle East, and a third is used in Asia. It looks pretty safe to bet on China and India, particularly using more oil than the rest of Asia doing so too. Transferring coal to natural gas, that seems pretty obvious. I think you can obviously expect the Middle East to remain pretty oil intense. The Middle East has the strongest demography. You know, these countries are like 75% under the age of 30. The Gaza Strip, I think there's 7 kids per woman. You know, it's places like this have enormously strong demography. So does Africa. So I think you can get to a demand growth number there. Europe at the margin hasn't made much difference for the past 10 or 15 years. There will be continued substitution. By the way, you mentioned earlier that a carbon tax would make, you know, US gasoline prices double. European gasoline prices are basically more than double what they are here, which is, you know, why Europe is half the energy intensity of the US, because we've maintained such cheap energy here for everyone essentially, and that's why US demand for energy is so intense. We could actually pay more and be more responsible, but as you know, here the environment's so controversial. You don't have the buy-in that you do in Europe of, you know, global warming being a threat. People just, you know, it seems like 50% of people just don't really buy that argument, regardless of, you know, what seems to be pretty clear evidence all around them.
And
So
isn't and to that point, isn't it amazing? Because I mean, I've had the same thing, and you know, when I was way younger. So this isn't a political comment, but I read Bill Clinton's My Life. I was living in Canada. It was like the most relevant president to me because I was coming of age. And so I thought it was interesting. And there was a chapter in there about the Arkansas gas tax that he passed. And he was unbelievably unpopular. And that almost set the tone for how politicians in the United States should not pass the gasoline tax, because someone who was so popular like really hurt his chances for re-election, as I recall the story reading it in the 90s. And
yeah,
so when you think about it today, and I've always said this, like global warming is about consumption of fossil fuels. It's not like BP and Exxon are pushing you to use them. They're making a product that's being consumed. And if politicians on the left truly wanted to address energy use in the United States, they would just put a gas tax on. They would double the price of gasoline, and that would be that. Because demand would at that point start becoming more sticky. You would buy more efficient vehicles. You would live closer. You might only have one car. Like, financial incentives work. And yet they've gone to, let's just ban fracking and we'll spend $2 trillion on new infrastructure instead of going to more efficiency. Do you find that that is as hypocritical as I do?
Well, the big point is crucial, which is why are these people always going on about supply? Change the demand side. I totally agree with you. And if you speak to the smartest people, including Exxon, but Matt Fox at ConocoPhillips is a big contact of mine, they totally subscribe to the idea of a carbon tax. Years ago, I testified to the Senate that you need I think it was $2 a gallon, or maybe $3 a gallon on US gasoline prices to pay for the war in Iraq. And they were begging me not to say that because it seemed like such an inappropriate comment. But my answer was like, well, what's inappropriate about it? You're going to spend this much money. Don't tell me you went to Iraq for any other reason than oil. Because I mean, come on, man.
Yeah.
And, the fact that this need that we've had historically to go into these countries and really kind of beat everybody up to make sure that the oil still flows has an enormous cost. And that's just the financial cost. Obviously, the human cost has been a disaster. But again, it's the supply side solution, right? And so that's why I think the electric car is so powerful, even though, as you know, there's a lot of controversy about cradle to grave, whether it really is more environmentally friendly. Another line I have is that, if you want a solar power, an energy dense solar power in abundant form that's easy to produce, it's called oil. I mean, yeah, the industry's got a poor job, a dreadful PR job of making this stuff seem filthy and dangerous. And it does generate CO2 when it's burned. But if you think that we're using 100 million barrels a day and you've had one outrageously bad accident in the past 10 years, sure, it's a disaster, although arguably it was a fertilizer shot for the Gulf of Mexico. And by the way, it stopped them fishing, which is one of the best things that happened to the environment down there for a while. But ultimately, that was clearly an environmental disaster. But if you again, we said this on Friday, if you know the units, you'll realize that actually we use an incredible amount of energy, particularly oil, with really almost no spillage, really minuscule amounts of spillage on what, a cup of it, this much oil will take a Hummer 2 miles, whereas my line was always, if you covered the whole of Manhattan in solar panels, you get one gas station. Is that really more environmentally friendly by the time you've made the panels and everything else?
Right.
The other difficulty with long-term energy forecasting, I think, is the price, because what we've done with technology is we've lowered the price of oil. That's why you probably need to respond with a tax to rationalize the use of oil. And I told you the story about coming to the US in 2004 with head-height snow on the pavements, arriving at Deutsche Bank, and there was a guy smoking a cigarette out the front with an enormous pool table-sized electric air heater on him. And coming from Europe, I was like, what are these people thinking? Why doesn't the guy just have a smoking room inside? Because if you ran an electric heater like that in Europe, it would crush your, it would be extremely expensive. And here it's just not, because the electricity price is so much lower.
It's so interesting to, again, when you do the dive into all of the different elements and how you recommend policy, and to your point of how politically unstable. One of the things that Mark Mills said on the podcast that I thought about a lot this weekend, I couldn't figure out why Google and Netflix and Amazon and others were so committed to this green energy, no carbon footprint, etc. And Mark said, and has written about it in his most recent book, that right now the carbon footprint of just the data usage of these big companies is equal to the global aviation industry. Because as you said, similar to energy, the cheaper energy became, the more we used it. The cheaper information storage has become, the faster bandwidth has become. Instead of us using less, we're using more. Zoom uses so much energy, and then we save it and we store it somewhere, and our phones are storing all this data, that every time we lower the cost of something, by definition, you're increasing the capacity that you can do it. And so the Social Dilemma movie had talked about how maybe taxing data acquisition or data analysis was one way. And it's interesting, on the energy side, there's a lot of parallels between the energy market and the technology market in terms of world demand, world supply, cost curves, etc. How do you think about technology vis-a-vis energy and this concept of a bust and taxes and sustainability?
Well, the big data point is crucial, and essentially where those are located over on the East Coast is basically coal-fired power. And when Buffett did the Dominion deal, you saw the pipeline, the gas pipeline that was going to address that was cancelled. So it becomes so complicated because that's what's so powerful about China. You don't wish for a dictatorship, but you kind of need someone to come in, a la Chinese, and just say, okay, we're going to do this, 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 and this, and everybody else shuts up. Because at the moment, the complexities of the way people get tangled up in this stuff, part of the agenda, as you know, is just let's use less fossil fuels, full stop, regardless. We have to, which is, all very well and good. But my line is always, environmentalism is a luxury, and so for Greta, God bless her, out of Sweden, to say we've got to be more efficient. It's my attitude is it's kind of easy for you to say, but go to India or go to China, take a look around, and then decide how much less energy these people can use. Because it's easy for a Swedish schoolgirl to think that we're using too much energy. And by the way, she is using half per capita the energy that we're using in the US, where you could really make big improvements. So it's difficult because the policy is just so discombobulated in terms of what we really should be doing. Even another example on the other side is that under Trump, they stopped the methane. They stopped this methane emission requirement, which is outrageous. You shouldn't be allowed to flare. I mean, of course you shouldn't be allowed to flare. You
Right.
shouldn't be allowed to leak methane from a 1 barrel a day thing. You should just shut them down. It's like, get rid of this stuff, please. And to go in completely the other direction as you had under Trump in certain areas, it's just not right, in my opinion. You've got to be smarter than that and not try and really try and mitigate environmental damage. The
My
other
rec-
thing, go
my
ahead.
recollection on methane was I think methane it's a catch 22. It
I
has
forgot, I forgot it's methane in the US.
methane, it's tomato. But I think the global warming impact of methane is 80 times CO2, but it has a half-life of 9 years. And so it's amazing that the industry, especially in March when demand was destroyed, and I loved your comment because it's true, we learned how dependent the world is on oil because when we shut everything down, oil dropped 35 million barrels a day. That wasn't like that was a very clear sign we use it. But the industry, through their RRC commissions and through companies, they didn't say, okay, let's just ban flaring, because flaring is typically because we were running so fast and trying to bring wells on that you would bring a gas oil well on in the Permian and you would just flare the gas as a waste product. But if you had more timing and you banned it, you would be forced to bring the pipeline there, and it's not like there wasn't the capacity. And yet the industry didn't take the opportunity to shut down flaring, which I did find very, very surprising, because it would have helped demand, it would have helped public image, it would have helped the environment, and there was really a no downside. I was very surprised by that, so I'm glad you raised it.
Yeah, and it's a shame that, another good example is, it's easy to say, but you should have been rebuilding roads, obviously, during COVID and stuff. I mean, there was a lot of opportunities there, which unfortunately we just don't have the political capital. I mean, the quality of policy right now on both sides is just embarrassing, obviously, but having come out of that debate, I mean, they're meant to be debating policies, you know what I mean? Let's not go there because, you can read it on Facebook, but it is staggering. The Democrat plan is kind of designed by AOC, right? Who was a protester. One of her first political experiences was Standing Rock. If you look at the actual, with due respect to Standing Rock, if you look at the actual reality of the risk of that pipeline and what they've done to mitigate the risk and what it does to improve the environment through not using trains to transport oil, a new pipeline, which is what we need. We need to be getting rid of old pipelines, not stopping new ones. I mean, for example, all that stuff is kind of nonsensical, and it's like you're barking up the wrong tree. But what can you do? This is an agenda of not using fossil fuels full stop, and not really having a sensible energy dense alternative. The one thing that's great, obviously, is the technological improvement in solar, and the real holy grail, obviously, is the battery. The ability to store electricity is really the holy grail of getting this thing clean. And of course, we all know that the supply solution is nuclear. But good luck with that. But if only, we could, there's a way we could do it, which would be pretty sensible, which we won't.
But if we spent, I
I
mean,
mean,
and this is the TARP again, which is, I think, history rhymes, it doesn't repeats. The TARP example, whether it was 800 billion, which is my recollection of that bill, versus 460 that was spent or not paid back, or the 2 trillion, it doesn't matter. But if we spent the amount of money that we just threw at the COVID, it's a lockdown, let's give everyone money, let's give everyone incentives, let's not worry about the tax base, let's kick the can down the road, here's $2 trillion. Oh, by the way, the Fed's going to start buying Apple bonds because Apple is really struggling with capitalization.
I mean, it's extraordinary.
That one's extraordinary. That one is the one I always say, it's extraordinary. And if we threw $3 trillion at nuclear energy, and because Jigger Shah, who we had on the show before, and others have said, look, there's no lobby for it, and there's no technology for it, and it's so expensive, and everywhere you look, nuclear energy around the world is being decommissioned because of this, that, and the other. But if you spent the $3 trillion that we spent in the US on phase 1 of COVID, you would have solved a lot of these technology issues. Again, back to your...
Yeah, but if ifs and ands with pots and pans, then beggars would ride horses. It's just not going to happen. So you have to kind of move on, and we have to try and make sense. I mean, my view is what will happen essentially is that one of the interesting things about jet fuel demand is thinking of the 9/11 example, where obviously people thought that nobody would fly again because of, the horror. And within 2 years, everyone was back in the air. And personally, I'm pretty desperate to take a plane. Actually, I really want to go and see my parents in Europe. So I think that there will be a strong recovery once we get through this COVID, this weird phase of COVID, where it's like, sort of illogical in terms of what's going on in terms of government policies. But once we come through that, demand will come back, and we'll really prove out this idea that the world is highly dependent on oil and needs to shift. But this next 5 years should be extremely bullish for oil, because essentially, just in terms of, for example, electric car penetration in the US, you're just nowhere near where you need to be to make a difference. And that's going to be the reality. Nobody's going to want to own the stocks for ESG reasons, essentially emissions reasons. So they become tobacco stocks, and they have to pay out a lot of cash basically to bribe people to own them. And people will do that. You pay a big enough yield and they don't care what you do. And that's the example is obviously tobacco. I mean, there's really no moral argument for owning a tobacco stock, but they trade at a richer yield than Exxon does right now.
So let's talk now, because we talked demand and all of the crisis, and I do want to close when we do that on your view of inflation versus hyperinflation versus stagflation, the Japanese model, versus deflation, which, if you think about the unemployment, and if you don't truly put people back to work, you have 50 million underemployed people. They drive down wages, but at the same time, the Fed's trying to pump up asset prices. We'll come back to monetary policy in a second. But when you talk about equities, and you think about oil and gas companies, and it's one of the places where people who don't necessarily read everything I'm saying, when I say that there's peak oil in the US, I think 13 million barrels a day is the peak that we will produce. I also think that as a valuation, yield aside, that the companies at the current projected oil price don't have a value proposition that makes it compelling to own them. But I know that you do this for a living, so I'm very curious how you think about Exxon, Chevron, and others in terms of how do you make the compelling argument to own these, and what happens with an Exxon with a 10% yield and free cash flow negative and overinvesting and using debt, and how does all this play out in your view until oil prices rise?
Well, I don't. I mean, the problem I've got right now is I'm an oil analyst, and we're looking at, as you say, the exact point of pain for the companies, which is around $40 a barrel. And as you know, the difference between $40 a barrel and $50 a barrel is free cash flow. So essentially, anything below 40 is just an abject disaster. I mean, some of them claim 35 break even, but that's not a very attractive break even insofar as what they're saying is we can stand still and pay a pretty measly dividend. It's not a powerful investment case. So you really need a coherent argument for oil to go to 50 and beyond, at which point they all become rocket ships in terms of how much additional free cash flow. But the good news about this whole thing, obviously, is they're restructuring, they're consolidating, and they're reducing their capex, which we had been arguing for years, essentially. I mean, I started this argument with refining. You know, when I back in 2010 when we got bullish refining, um, the argument was, you know, you can be better by spending less money and generating more free cash flow. The fact that you're in a tough industry doesn't mean that you need to spend to grow. And that was the key question: was why on earth are you spending to grow? And by the same token, it's been said many times by many people that, you know, the world oil market grows 1% a year. Why would you be a large US E&P growing at 20% a year? I mean, just take a step back. And by the way, stop looking at your company in the context of your company and thinking you've got a great brand. Spend at least a second looking at everyone else. You know, so for Exxon to come out and argue that they were doing counter-cyclical investment in Guyana was true. To argue they were doing counter-cyclical investment in the Permian was like, what are you talking about? The Permian, you know, you can't. They at one point only a year ago, they were flying people into the McDonald's, right, to serve enough burgers because the place was so hot. How they ended up chasing that theme with the timing they did was just insanity. So it's tough, but I think it's getting better. And I think they are getting the memo that this industry doesn't offer a long-term attractive secular theme that people want to own, which is essentially fossil fuels. You're going to have to bribe them to own the stocks. And the fact that people are letting Exxon sit at a 10% yield is a pretty scary fact. You know, I mean, that's not enough. People don't have enough conviction that that's a sustainable yield for them to want to buy it. In theory, with Exxon's balance sheet, you should be buying that thing with both hands. But what's interesting to me is I can get Enterprise for an even higher yield, which is arguably a better company, at least a better financial outlook. So we're still not quite there yet, as long as the market is as oversupplied as we are, and it's very hard to be enthusiastic about the stocks right here until we balance this market, which is not going to happen over the course of this winter. I can tell you that it's brutal. If you think about it, David, ignoring the first half of this year, this would be the worst oil market we've ever seen. Right? I mean, it might be better than what we were in, but if we were just sitting here today and said, "Hey, how's the oil market, Paul?" I would go, "It's a disaster." You know, I mean, let's not underestimate it. It's like 8 million barrels a day of lost demand still, right? Or whatever it is, but eight. I mean, the market's approximately balanced with OPEC having cut 8 million, something like that. You know, big numbers.
But that, I mean, and so I will admit, and we weren't connected, I don't think, going back to going into this year. But I, like you, I similar to you. I also like you, but I similar to you tried to do the macro, and you know, was I looking at geopolitics in Africa, etc. But I made a bet with some colleagues that oil was going to exit 2019 December 31st higher than 60 a barrel. And my view was because U.S. underlying declines were so high, and that we had maximized the length and the fracture propagation we could do, that with any level of free cash flow constraint which occurred, and any level of consolidation which would simply be just ramping down activity, that there was no physical way the U.S. could grow. And so the world under steady state should have expected 1 million barrels a day of U.S. growth, when in fact I thought that the market would decline 1 million. So that was 2 million. What I didn't factor in was the fractures that existed in OPEC. And so I'm sort of in the fool me once, shame on you, fool me twice, shame on me. And so OPEC being the 8 million barrels a day of balance, and oil goes up to 40, every time oil goes up, I keep saying, well, they're going to cheat. They're going to send, they're going to do this, they're going to do that, until the US actually declines 5 million barrels a day, and Canada declines, and OPEC actually just, like, whatever is going to happen, until we are actually balanced with no surplus capacity, I have a hard time seeing oil going above 40. And as you said, 40 is the cataclysmic sort of, below 40 US E&Ps are done. At 50, US E&Ps are a lot better. So how do you factor in that OPEC knob as it compares to where we were in March?
Well, you're dead right. Obviously, it's not obvious, but obviously you're dead right. The balancing item is US, the fastest cycle, highest decline. Now, I'm worried about decline rates, because in 15-16, the argument was always, in fact, I was looking back at John Watson, Chevron CEO, saying that 100 is the new 20 in 14. And then, of course, OPEC changed strategy and went for market share led by the Saudis. The decline rates just never kind of really showed up as much as we thought they would. I mean, we'd always talked about a 6% global industry decline rate, ex OPEC. and we got maybe two, and that's technology. I was standing in Alaska, actually, in the North Slope, with ConocoPhillips, and I said to the reservoir engineer, my argument to the clients is that with technology, we've learned how to squeeze the sponge harder. And by squeezing the sponge harder, we'll get more oil, because essentially in the downturn, you put your best engineers off growth and onto base. And by looking at the base, they've worked out, how to squeeze the sponge harder, but decline rates will be higher in the next phase, because essentially you squeeze the sponge till it's dry. And he said, I know it's a family program, but he turned to me and he said, that's bullshit. And what he said is, we just drain the reservoirs better. We just got better technology and we're getting more oil out. And as you probably know, Chevron in California has got a 60% recovery now on what was thought to be, let's say, in the Permian. I think we were doing about 12% recovery.
Yeah.
Right. So if you imagine the Permian goes from 12% recovery, you can't for tight rock reasons, but 1 or 2% of additional recovery is a big deal. So I'm worried that decline rates don't help us as much as we hope, because we really need the US to decline to balance. So it looks like it's going to be a very another painful 6 months for the industry as we look for what you're highlighting, which is US declines. On OPEC, the new oil minister of Saudi is interesting. He's aggressive. He's a prince, so he doesn't, he doesn't suffer fools. And he's kind of mean to people. I mean, the other day, everyone in the Vienna circuit was really excited that he was calling out the UAE for cheating while sitting next to the UAE minister. And in diplomatic terms, this is pretty uncomfortable stuff.
Right.
And he's ripped the Nigerians, the Angolans at various times to get everybody on board. There was the furious situation with Mexico, which ironically is now producing below its quota, by the way. So I think the main construct there is a very new one in terms of oil market history. It's dramatic and crazy in geopolitical terms, which is the Saudi-Russia agreement. And the fact that Saudi and Russia are on the same page, and I believe they are, is actually pretty constructive for OPEC Plus, and they can kind of bully everyone else. I asked them about, what are you going to do to these poor Africans in terms of forcing them to comply? And they basically say, we have the same customers in Asia, and if you really want a volume fight, we'll give you a volume fight. I really suggest you cut production. So it's sort of, carrot and stick insofar as if everyone stays on the same page, we can get these inventories down. And in fact, as you know, the inventory levels have come off. They're still enormous in Asia, and there's a huge concern right now, which is very bearish, that China has way too much oil offshore and was aggressively buying below 40 and is now not buying. So the balance still looks very problematic. The question you really asked me was, when does OPEC produce more because of higher prices? I think they can kind of hold discipline to 50. I think, it's a very tough sum for them, but it's a very simple one ultimately, which is obviously the price times the volume cut. So there's cartel economics that can apply if you produce 10% less oil for 20% more price. This is very much what they did in 16, right? Was that they said, okay, we'll cut by whatever it was, 20%, and we'll get a 40% higher oil price. And that happened. The mistake was that gave a lifeline to the Chesapeakes, et cetera, of the world, who should have been out of business back then.
Right.
And gave them an extra 2 years of booming supply growth. So essentially, they only kicked the can on addressing the US issue. In the early 2010s, they believed you needed the US oil because we were running out of oil supply. And so they really encouraged the US E&Ps to grow. They shouldn't have cut in 16. They should have rationalized the industry sooner. Now we still have to rationalize it more, although we're obviously on that path.
So do you think?
So no, to that point, because Mark Rossano is a friend of both of ours, and when he was on the podcast about a month ago, we made an estimate that at year end both of us thought oil would be 35, and overlaid on that is your sort of thought around. There is the 20% more price for 10% less volume on a net basis works. There's your refinery thesis, and quite frankly, US E&P thesis, which is spend less, let volumes decline, prices will go up, and your business is healthier. And Mark has identified that for the last month at about $39, there's a bidder that comes in the market that runs it up to 40, and then it goes away. And it happens every day when the European market closes, so like 1 a.m. ish. And it exists, it existed today. For no reason, oil was 37.50, and then it ran all the way up to, before we started, like 39.25. And he thinks that buyer is sort of going away. I'm curious if when you overlay your thesis on OPEC knows 40 is a real number. If it's 30, then you have all these bankruptcies and recapitalizations and new money. But at 40, you kind of pay your things. There's hope. So is OPEC kind of fighting just to get to 40 and then it drops, and then are they managing the price to be 40 so that they've learned their lesson of 2016, in your opinion? And where do you think year-end oil is?
Well, they would tell you that they're trying to manage inventory, right? So basically, they're just trying to get the inventories down, and you can see pretty easily now, thanks to modern data, the tracking of the ships which are holding inventory is pretty good. There's like 150 million barrels of oil floating around right now. Floating storage is very inefficient, obviously. So you don't want to hold oil in ships for no reason. You've got to sell it, and they'll try and bring that down. Historically, they wanted OECD inventories within a range of about 60 days, 65 days forward cover. We're still well off that, but they're kind of holding it together. And it's a little bit like COVID. We're sort of waiting for the vaccine, you know what I mean, in oil. In this case, we're very much waiting for demand to come back. And, the extent to which it does over the next year, I think can surprise to the upside. But as you can tell, I'm pretty tentative about it, and it's very dependent on jet fuel. I agree with you on the end of the year. I've said the only thing bullish about oil is the dollar. So the potential, essentially 90% of world oil trade is in dollars. So if the dollar weakens, for example, because the Fed is just crazily printing money, essentially the world oil price reprices globally. And so if you were to get another significant down move in the dollar, which we haven't had recently, as you know, we stabilized the dollar, that could be bullish. But the balances themselves are horrifically problematic. As I said, it's very interesting, isn't it, though, that we've had such enormous demand, because 10 years ago, if you told me 95 million, I would have said that's a great number. The US gas story has been phenomenal. That's also been incredible. And so our point to these companies has been, the problem's not the market. The problem is you. Your strategies suck. You got the oil price wrong. You spent too much money. And hey, presto, for 20 years, I sound like a jerk when I say this. Ever since SARS, we warned that a pandemic could be a major downside, because it was obviously potentially a major downside since 2003. 1/4 of SARS was bad for oil markets, let alone a global pandemic. The planning going into the potential for that outcome, a black swan event, essentially, it was just like, are you serious? I mean, ConocoPhillips was okay. They were planning for 40. Chevron was okay because they had their capex under control. But you've got people, that were just wildly indebted at the top. And it's like, what are you thinking? It's a cyclical business. You're going to get an opportunity, and Exxon is really an offender here. You had an opportunity here to buy a major company for, 10% or 20% of the value that it was at 2 years ago. Why didn't you just wait? It's a famous analyst question from the ConocoPhillips Burlington acquisition, which was announced in November of 2005, I think. It was the day before the all-time peak in the US gas price, and they bought a major gas company. And the analyst question was, it was in November, the analyst question was, why didn't you wait until March?
Right.
It's like, dude, the price is not going to be here in 6 months' time, So I don't know. It's just been, they just got the oil price wrong, and that's kind of a bad mistake when you're running an oil company, right?
This is slightly. It's kind of one of the two factors that matters. Where do you fall when we talk about the Fed and printing money? And there's obviously rumors. Trump tweeted out from the hospital this weekend that get the stimulus package done. There's a skinny version. There's a heavy version. There's all forms of discussion on it. Where do you fall in terms of what do you think happens, and then does that lead to stagflation, deflation, inflation, or hyperinflation? And what is your base case for what's going to happen in the next 5 years, monetary policy wise?
I think as a European, the big point I'd make is it's always striking what a hideous, socialism is a dirty word. Socialism is a dirty word. And I realized 15 years ago or more coming to the US that this is going to be an unbridled capitalist model. You know, I think what people miss is that the internet is a highly capitalistic tool. It's highly controlled by very few people can do a lot of work without the need for a whole lot more people. You know what I mean? So obviously the combined effect of unbridled capitalism and the impact of the internet, what you end up with is Jeff Bezos, after his divorce, is now worth more than Exxon. You know, I published the chart in the Sunday Sankey just yesterday and got the note from the Middle East saying, appreciate you adjusting for his divorce. The point is that the wealth concentration means that if you're pushing on the string in the way that they are, as I think it's blatantly obvious, you're just going to make the rich richer to the point where doesn't make any difference, because, you know, as one thing about being rich, as I've always said, is that, you know, an orange tastes like an orange to Jeff Bezos as much as it does to me. I can get as good an orange as Jeff can. The point is he can't even come close to spending that much money, you know, in his children's lifetime. And so essentially you may have to see a socialist model where people do a Buffett or a Gates. You know, Bill Gates, I think, has been fantastic in terms of just trying to get this money back in to the places where governments won't spend it because it's just too much money for one individual. But the potential of these bailouts, etc., you know, people, as you know, are very mixed emotions, to say the least, about bailing out airlines, you know, or bailing out banks the last time around. Should you really have bailed them out? You know, if you're going to run a capitalist model, what they're doing is they're not running it both ways. You know, it's like they used to call it the trader put on Wall Street. They still call it the trader put. You know, I bet I'm right. I bet I'm right. I get a big bonus. I bet I'm right. I get a big bonus. I lose everything. I still keep the bonuses, right? And all you did was bet right 3 times on the trot, and the 4th time you lost everything. You still made a lot of money. Where's the clawback on that?
Yeah.
And socialism, as I said, here's the dirty word. So it's very difficult to even use the idea of better wealth distribution or better tax systems, which, you know, it's a difficult subject, and I don't necessarily know the answer, but I think that the Fed printing, nobody on Wall Street that I know of thinks it's a good idea. It's just that the US government is over indebted and has to inflate its way out of trouble. The tough thing for you and me, because at a given level you can say, well, just what do I do, is in theory we should probably be borrowing a lot of money. And this goes against your kind of instincts, but that's the system, right? So you should actually max out your borrowing on the view that you will have to pay back a lot less money in the future because they're going to inflate the debt away. Why? Because they're telling you. I mean, that's the other weird thing, is they're kind of telling you what the playbook is. But none of us feel comfortable about it. And none of us really know how it plays out. And the only real model we've got, as you know, is Japan, which is a real head scratcher. I mean, it's like, I don't know, you know, I don't know.
I mean, you talk about, again, logic, and the smart people we know in the rooms who are having these conversations are all, Danielle DeMartino Booth was on the show, and she's like, I just can't understand. Like, everyone knows this is bad, and they're telling you the playbook, so therefore the people with money are then buying the thing the Fed is telling you they're going to do, and then it's working. It just seems illogical.
Well, the example you gave, the Apple debt example, intuitively is like, what, you know, under what, you know, you're like speechless. You know, why would you be doing that?
Yeah, that one made it, and on tax.
And also, by the way, if this is unbridled socialism at a given level. That's the other funny thing about it, is that, you know, having the government print money, essentially, you know, to try and bribe people into, I don't even know what they think they're going to be able to do. I mean, you send the checks and it goes kind of into the market, right? So one thing I noted earlier this year, someone saying, what happens if the Fed has printed all these dollars and the economy still sucks and the markets that are record high? Are they going to worry about that? And it's just interesting that 9 months, 10 months later, that's exactly where we are. It's like, okay, so you crank the stock market, whatever it is, you know, the statistics approximately that 50% of the market value is owned by 2% of the population, right? I mean, these dudes, I mean, I live in Brooklyn, but the guys around here, it's not easy for them. You know, this is a tough environment. There's no money, and they're desperate for the checks that are really, in many ways, paying them not to work. You know, it's kind of crazy situation. It really is, and it's really worrying to all of us. And at the same time, the market goes up every day. So what do? We buy more market, because you'd be crazy to fight it. You don't fight the Fed. But does it make any sense? Not really.
Yeah, well, that's the K-shaped recovery, which I didn't, and a lot of people didn't understand it a month ago. But it's sort of like, if you have money, and you know, most rich people, their primary source of income is not income, it's asset inflation. And most poor people, they need the income. So it's getting worse for Main Street, better for Wall Street. And on tax policy, like the gas tax, it's shocking to me that the federal government has had this step up in cost basis. That has always driven me crazy. And so again, I'm a Republican or a liberal socialist Republican, depending on how you want to describe
Describing
it.
yourself as a socialist, then, mate.
Well, I mean, I like you from Europe. I grew up in Canada, so I do have views on education and healthcare that may be somewhat different, but I'm also very, very Republican. But what I will tell you is if my grandmother bought Apple stock at $1 and it went up to 500, the fact that under $11.5 million when she dies, she gets a cost step up basis, so she passes the taxes that she should have paid tax-free, passes that wealth on to her kids. That one makes no sense to me. Like, close the estate down. I don't believe in an inheritance tax, but like, pay taxes on what you should have paid taxes on. And those are the little things like a gas tax that it's like so logical that if people understood it, you would think that 90% of people would support it. There's no, it was for farmhouses. It's not for Apple stock. But we digress.
I think it'll be interesting. One of the things that I've heard on Wall Street a couple of times is that the prediction that Trump wins and that the next president will be AOC. So the idea is essentially that there could be, and certainly for example, my son is a big Bernie guy. He's 19 years old, right? And he strongly believes in decent medical care and all these stuff. You've got the social conscience. There's a very, very strong attitude amongst young people that, essentially we should turn socialist. And it should be a pretty important political dynamic for these next elections. Certainly his attitude is that he's lost it with the Democrats every time they dump Bernie. Certainly with Hillary, Bernie is pretty well covered by Michael Moore's Fahrenheit 11.9, which is way more critical than you'd ever think of the Democrats. In fact, it is a critique of the Democrats as such for about 3/4 of the movie, where they really haven't respected what that side of America wants, which is a much more socialist outcome. I don't know. It's a very difficult one. It's going to be a challenging 50 years. I think we had a good past 50 years. It feels like the next is going to be a pretty interesting ride, to say the least.
What would you? So the question I ask is, what would you give as advice to yourself? And I think because you raised your son, what advice, when you think about you as a 19-year-old and everything that you've learned in your experience of the way, I don't mean to make him sound naive, but the way the world works, which you experience through work, through relationships, through firings and hirings and divorces and everything. What would you tell 19-year-old you or your son that you think would have made a meaningful impact on your life to where you are today? And what advice would you give?
Well, I can only observe what I did, and I screwed up a lot of things for sure, but I always worked and went and got money. You know what I mean? I didn't inherit any money. I had no free ride, and I always, from the age of 15, 16, Greg Goff, the former CEO of Tesoro, is one of the top guys I've ever dealt with, and he was exactly the same. He was working in his parents' shop, when he was 13, 14. And essentially, you've got to work hard. Anybody who's had any measure of success that's not inherited will tell you that the first step is you just got to work hard, and it's not that easy. And I've been working hard for whatever it is now, 30 years plus. And, that's sort of the first key to it. I think, know everything about something and something about everything. So I think that you've really got to try and really, and as I say to my other son, who's a soccer player, you've really got to put yourself in the context of Ronaldo and set your aims very high in terms of what can be achieved. Don't half-ass things. This it's like I used to say to my associates when we were the #1 team on Wall Street back in the 2000s. This is the big leagues. This is serious. We're going up against Goldman. We're gonna have to beat Goldman. Put it in context, so not only are you going to have to work hard, you're going to have to be pretty good at what you work at, and you're going to have to know a lot about it, because these guys are not slouches that you're going in against, and it's competition. And by the way, life's not fair either. You've got to make your luck, you've got to absolutely make your luck. I think there was one thing I was thinking, because I thought you might go in this direction a little bit. One of the most important things I've learned about how to deal with people is the Jungian theory of personality. I don't know if you're familiar with it, but it's simplified into the eagle, owl, peacock, dove, and
Okay.
working out where people are in that quadrant and where they go under pressure. So working out whether somebody's a peacock, obviously that would be a Donald Trump. The opposite character would be an owl, which would be an introvert, which would be say a Bill Gates. An eagle obviously is somebody who is very determined and forward-looking. I would cite probably Vicky Holland as an eagle, and then on the other side of that would be a dove, which my father was a diplomat, somebody who's very keen to try and settle everybody down and be friends. And then under pressure, people change character or double their character. So somebody might be a double eagle, means that the more you pressure them. Now, once you can identify people, you, for example, have a bit of peacock. You can actually have all four characteristics, and none is right or wrong. But once you understand where people sit in those quadrants, it becomes much easier to know how to deal with them, because you don't go into an eagle as an eagle. You don't obviously go into a peacock as a peacock. It's not going to work. And once you know who you're dealing with, you can then balance how you have to deal with people over the course of your career, because I know it's a fact. I can't swear, but
oh, you can swear all you want. We have no restrictions on swearing.
Well, the line was, if you meet an arsehole in the morning, you met an arsehole. If you meet arseholes all day, you're the arsehole. And learning how to deal with people and get through and really work. One big thing for me has always been, and this is what's tough about what I'm doing now, which is very much on my own, just because the revenue is so bad at the moment in oil equity sell side. I'd love to have a team. I always love having a team, but at the moment you just don't have the revenues to do it. Hopefully that will change, but it's tough out there. But having a team and working with a team and respecting people in a team is huge, and understanding that you can get people who are smarter than you and surround yourself with people who are smart is also key. And understanding those personality traits helps you build a complementary team that then becomes much more powerful than just one eagle doing an eagle thing or one peacock doing a peacock thing. And I think that you can see that Trump has struggled with that. He struggled to keep a team around him, actually, because of basically his personality, right, which is interesting.
Well,
go ahead.
No, I was going to say the video he published on Saturday honestly was the most presidential video I've seen, where he had a level of humility, he had a level of thankfulness, he was not made up, he wasn't all bluster, he was more thoughtful. And it's interesting that in moments that someone could have that trait and then somehow not know over a 74-year life that is the trait that people like more. And I think that what you said about when you're a peacock, sometimes you need to be an owl or you need to be a dove, because a peacock always being a peacock doesn't play and doesn't.
And the peacock can be a peacock, but he needs some owls to help him out, some introverts, quiet people that are really thinking. And maybe, yes, exactly, that if he showed more dove and owl characteristics occasionally, it's much more powerful when somebody shows some balance, because ultimately what you're really looking for your own personality is to try and be in the middle. It's hard to do that because you have introvert, extrovert, etc., but tempering your own behavior in order to balance your conduct is much more powerful. And I think that's where Trump, a lot of people would say, I like his policies. Maybe there's some racist stuff out there which is too much, but basically the general idea is pretty good, but the presentation of it is just like, oh my God. I mean, he's going to have a lot of people who don't want to vote for him because of things like the conduct during the debate, right? I mean, it's just like it turns people off in a very big way.
Saturday Night Live did actually, some of the shows are leftist, and so for Republicans sometimes they're painful, and certainly John Oliver has got painful, even though I used to love him. But Saturday Night Live did a very nice cold open on the debate that was pretty humorous. I think even a Republican would find it actually pretty comical. And Jim Carrey might be the best Joe Biden that they could have ever found. So, well, Paul, how can people follow you and track you? And you obviously have a business, you're independent. Talk to people about how they can connect and what it is your business model is, and then we'll wrap the show.
Well, the business model is, to be honest, somewhat institutional, right? So I'm really dealing with big, long-only fund managers and hedge fund managers, and we're really trying to sign that sort of somewhat exclusive group up, because ultimately there's a lot of compliance that has to be gone through and stuff to satisfy selling research to some of these guys. It's not just about spraying the stuff out. theoretically, as an independent researcher, I can say whatever I want to, but you can't now sell into hedge funds without really strong, nor the big mutual funds for that matter, without really strong compliance. And that frankly makes it a higher cost product because it's a sort of high touch, very short list. At the moment, having said that, what I'm doing is, while I try and build presence, is actually the website is open access at the moment, so anyone can read the stuff, which is basically written daily. I've got a new thing now, which is I take Mondays off, believe it or not, but that's because we publish on Sunday to get ahead of the market. And generally speaking, I've always been surprised over the years how few students come to me. Some have, and it's a principle of mine that will always help a student. So there's going to be some sort of ability of students unemployed to access the research for free without me upsetting my big clients who, I'm asking for quite a bit of money from, who then find out I'm giving it away for free. I don't think anyone that I would want to deal with would object to students and unemployed getting it for some sort of great deal. There's a middle ground which is tough, which is whether we make some sort of FT subscription, something around $1,000 a year or less, but something in that range for people to get it. And essentially, consuming research now, I'm sure you've got a lot of interesting things to say about this, is still, funnily enough, about sending the email. So essentially, even if you have a website which people can log onto and access, they still want the email. And so I think what will happen is that over time, and it won't be very long, it'll be over the next quarter or so, we'll tighten the list that will be, if you want, they call it the high touch list of people that I deal with on a one-to-one basis. And that'll be relatively high cost and very limited to professionals, essentially. And then there'll be stuff out there which, is for I hope, for the greater good, or at least adds to the debate. I'd always had a very British attitude towards Wall Street and what we call the city, which was that, it's just rapacious people trying to rip the working man off. And then I had a friend who was a hedge fund manager who changed my view quite radically when he said, it's an intellectual community. And the positive way of looking at it is that the smartest guys in the room, in fact, one of the funny lines about the financial crisis was smart people used to go and be doctors and lawyers and, do sort of classic things in their own little towns. And that's what the smartest guy in the town did, is he was the doctor. And the problem was that when smart people started going to Wall Street, we really got ourselves a problem. But the reality is that there's so much money on the line and there's so much to be made that you do attract the smartest people in the room, which is, a phrase, as you know, which is laden with second meaning, that it becomes very interesting to try and compete intellectually. And arguably, there's no barrier of entry. I set up a website and I started writing research using Word and Excel and PowerPoint. That's what I do. Anybody can do that. So, it may be that if you want to read a really good note, you want to write your own. Which is kind of what we do. And so there's that. But generally speaking, the website is sankeyresearch.com. It's right there. I would encourage anyone who's ever wanted to set up their own website. It's very easy to do. I'm interested right now. Previously at a big bank, I couldn't do Twitter and stuff just for compliance reasons. I'm really enjoying hacking around in the Twitterati or whatever you call it. And being able to do things like this without going through 400 hurdles and being limited about what I can say about Excel. So, maybe you need to edit that answer.
No, I love that. I love all your answers. I mean, I think, and this is the thing about the hot take of the day. You asked me on Friday what makes me tick. Talking to smart people about smart topics and being able to expand the logic, because there is so much reading. And a very good friend of mine said that an MBA is just a tour of the library and they show you where the books are. But if you don't go and read yourself, you will never accomplish anything. And so for people who think that they're unemployed and they should just go get an MBA and that credential will make them better, no. Listening to podcasts, reading reports, connecting with smart people, challenging opinions, and really resetting your thought, I think, is the most effective way for you to move forward.
Yeah, I would add to that completely. I mean, certainly for a start, I've always read a ton, and I've always tried to work out who the smartest guy in the room is, and I really listen to them, So the secret of my whole career, I would say, is actually been identifying who the smart guy is and really carefully listening to what they're saying and reading a lot of books over the years of all types. That's absolutely one key point is to read. The other thing is, I always said to my kids, you can be a garbage man if you do it well and you work hard. You can do really well in garbage. One of the interesting things to me is how you would have thought 20 years ago if you said, "Hey, we're going to start a burger joint." It would be like, "What are you thinking? How can you possibly start a burger company in the U.S. where there's Burger King and McDonald's and whatever?" It's a nightmare market to go into. And you look at it, you've got Five Guys, you've got Shake Shack. You can absolutely enter an existing market. And if you are good at what you do and really do it with a strong view of providing the customer a service, you can succeed. You don't have to invent the wheel or the Tesla. You know what I mean? You can actually just work hard at a straightforward business and even join McDonald's and work your way up. They all started at the bottom. It's all very doable, and this environment really means people have to think about that. You've got to go out and basically make your own money. There's no point in relying on the government, however generous they're being right now.
Yeah. Well, I love it, and I look forward to having you back on the show. I've really enjoyed our conversation. So, Paul Sankey, thanks for being on the show. Until next time, everyone, be safe, be good, have a great day, and bye for now.
Thanks, David. I appreciate it. You're great.